Afternoon, ladies and gentlemen, and welcome to the Millicom Financial Results Conference Call. Today's call will be hosted by Hans-Holger Albrecht, President and CEO, and Tim Pennington, CFO. Following the formal presentation by Millicom's management, an interactive Q&A session will be available. I would now like to hand the call over to Nicolas Didio, Head of Investor Relations. Please go ahead.
Thank you, and welcome everyone to the Millicom third quarter results presentation. Today's presentation materials can be found on our website, www.millicom.com. Before we start, I would like to remind everyone that the safe harbor statements apply to this presentation and the subsequent Q&A session. With me today on this call are our President and CEO, Hans-Holger Albrecht, and Tim Pennington, our CFO. I will now hand over to Hans-Holger to give you an overview of our Q3 2014 results and operational performance, after which Tim will take you through the financials and we will finish with the Q&A session.
Thanks, Nicolas, and good morning and good afternoon to everyone listening into our conference call. At our Capital Markets Day last month, you heard us that we confirm our target of being a company with 9 billion revenues in 2017. And today you can see that we are on track to achieve that ambitious target and our other objectives, which you mentioned at that occasion as well. We can see that the new chapter with the UNE has a good start. We see encouraging take-up of our new satellite pay TV services with 45,000 customers in a few months, and we see the continued focus on our efficiency program in order to balance growth and returns in a correct manner going forward. In the last 3 months, our revenue grew organically by almost 9%. That is actually at the upper end of our own expectation, and I think a very strong and impressive performance by the colleagues in our operations. If you include UNE, the company grew by 21%, again a very strong uplift towards our own targets. The organic growth is based on the strong mobile take-up, rising by almost 1.5 million customers, and the continuing shift from voice to data. Today we announced that more than 1 in 4 of our customers now uses data. This growth was driven by strong content, such as the exclusive FIFA World Cup app, for example, we showed during the very successful Brazilian World Cup, or the launch of Tigo Music as another example, now with over 600,000 users, which actually makes us one of the fastest growing music services in Latin America. And today we are also announcing 2 new initiatives, a partnership with Deezer to launch Tigo Music in Africa, like we did so successfully in Latin America, or as well the launch of smart apps to grab the interest of new data users in Latin America by offering a simple and very easy way to get apps in these markets. Something probably in the Western world we all believe is very, very easy. But if you don't have a credit card, like 80% or 90% of the people in our markets, it's actually quite a challenge to get access to those kind of apps. All these examples, and there are many more obviously, underpin the continued execution of the digital lifestyle strategy with the idea from our side to bundle those services to our customers in order to increase the ARPU by offering value for money and reduce churn by increasing the stickiness with several products instead of just one single product. And so far, if I look back now at the last couple of months and quarters, it seems to be working fine, and as you know, it's a key part probably of our transformation and our strategy going forward. However, I think one of the biggest transformation in the company's history probably took place on the 14th of August in Colombia, or exactly said in Medellin, when I was there and we executed the merger of Tigo and UNE. And as you're all aware, it is a very transformational deal for the company. From that day forward, over a third of our revenue is generated from Colombia, and $1.05, so 20%, will soon come from our cable services. So clearly, the UNE deal has a major impact, and it changes the business quite fundamental and has a high focus. I've been there several times during the last couple of months, and even the whole board of Millicom spent nearly a week in Colombia to be close to the situation and assess the opportunities there. And the good news is, since we got for the first time the numbers in, it seems the early indications for UNE are positive and going in the right direction. So as we approach our 25th anniversary next year, we can see how fast and how far Millicom has come. It has experienced rapid changes in the past, but for sure I think the last 24 months have been one of the busiest ones and one of the most radical ones in terms of changes. And just to remind everyone why we are doing this, it is simply because of the market dynamics. Our customers in our market want a rich choice of digital services that are technologically efficient and, most important, locally relevant. That means that we have to be very flexible, very opportunistic and nimble in each of the markets where we operate, but we have to focus as well on the local execution because that's the key USP we have towards other players in those markets. So the local hero we want to be in each of those places. And a good example for this is if you look at our innovations when it comes to mobile money. There, for example, we have launched the first interoperability service in Q3 in Africa, or we offered a return on mobile balances for the first time globally. So we have disrupted this kind of markets and business quite drastically, like we have done now, for example, as well again when it comes to the DTH and satellite pay TV business by launching Tigo Star in 7 countries within the last 3 months. So our strategy may have changed over the last years, but the innovation and the kind of forward-leaning approach is a key part for us to succeed. But just to be clear as well on this one, and we put a lot of effort during the Capital Markets Day as well, it goes with a clear commitment as well to financial discipline and returns. In Q3, the margin is stabilized, and our long-term guidance of around 35%, which we once more confirmed at the Capital Markets Day, is definitely on track as we extend our program of efficiencies from top to bottom right across the company. So overall, I'm positive about the outlook for Millicom. It is now a company transformed, and really we have to focus mainly on the execution. We can see high growth. We can see that we have a strong business discipline. And crucially, as I said as well, we are a company which is not only focused on innovation, but as well on commercial and financial targets. If we then move to the numbers and the concrete results of the quarter, if you move to slide number 5, you see 8.6% organic growth recorded in the third quarter, marks the 4th successive quarter of growth exceeding 8%. I believe, in my personal view, there's a real momentum here as we continue to grow our core customer base to almost 54 million people and provide them with a greater variety of digital products. This includes mobile data services, which is one of the areas where the success of our transformation strategy is most apparent. After a quarter where we signed up 1.5 million new mobile users, including 750,000 net adds in South America and over 500,000 in Africa, now 1 in 4, as I mentioned, of our customer takes data services. With each of these, as we explained at the Capital Markets Day, the loyalty strengthens and we reduce the ARPU volatility. And in mobile financial services, the extraordinary growth in users and volumes continues. We now process, just to highlight, on average, 1,000 mobile money transactions every minute. It is a product whose potential is only just beginning to be realized, which is why we have been so busy innovating with new partnerships and customer incentives. Of course, this growth is critical to driving the margin. In this continuing high investment phase, when we are busy building the digital lifestyle infrastructure, it has declined year on year, but increased sequentially to 33.4% in the third quarter. As you know, we have intensified action our efficiencies right across the company. We continue the rigorous country-by-country, function-by-function program, which has already identified important savings in one of our key markets. And remember as well that we have many new initiatives which have been startups, which are coming into business now, and we should see better returns in the coming months going forward. At the Capital Markets Day, we affirmed our target of long-term EBITDA margins of around 35%, but more importantly, I think going forward, operating cash flow margins of 20%, which Tim will highlight later in his presentation. The success of our business in driving forward profitability, revenue, or profitable revenue growth will be a key factor in achieving these goals. If you go to slide number 6, you can see the core organic growth needed to achieve this. The high growth Millicom has enjoyed in the past 2 years is built on the factors we outlined at our Capital Markets Day. Favorable macroeconomic conditions, with GDP levels rising faster than in the West, useful and growing populations, and a strong appetite for digital services. These factors are still in place, and each of our business areas is benefiting. Mobile is up by 5%, with data growth accelerating at 35%, compared to plus 32% in Q2, and clearly offsetting the pressure on voice and SMS. Data usage is growing more than 10%, with an average of 740 megabytes per user per month. And more data usage means for us, obviously, more stickiness. Overall, the churn was down 80 basis points this quarter versus last year. Cable is up 11%, with residential growing above 15%. Fixed telephony is slightly down and offset by strong growth of broadband and, to a lesser extent, pay TV. And finally, MFS is rising 45%. ARPU in Q3 was down 7% year-on-year due to the dilutive impact of new customers, but it was up 12% versus the second quarter, and this is an encouraging trend with the revenue per transaction continuing to go up. If you go to slide number 7, the rise in cable followed the launch earlier this year of Tigo Star. I mentioned it already at the beginning, which is now present in 6 of our Latin American operations, and seen on slide 7, the increased numbers of homes passed. Tigo Star has given an undoubted boost to our pay TV and broadband services. Growth has been boosted by the increased number of RGUs per household and the 20% rise year-on-year of double and triple play customers. With UNE in Colombia, we have now more than doubled our cable footprint, which has increased by 3 million to over 5 million homes passed. This will be joined by the tens of thousands more signing up for the DTH in rural areas in the coming months. Many of these pay for the satellite pay TV services using MFS. This creates yet another bond between the customer and the brand, and is symptomatic of our joint up approach to selling a range of digital service to drive our financial targets. Which is a good point to hand over to Tim to run through the financial numbers.
Thank you. I'll take you through these financial highlights and then we'll go into Q&A. So starting on slide 9, a few notable features in the quarter. Firstly, as Hans-Holger said, the revenues continued the momentum it's seen all year in local currency. And this quarter we had the strongest growth in US dollar terms as well, a reported revenue growth of 7.2% in US dollars. Secondly, the quarter saw the first contribution from UNE, and I'll talk about this a little bit later, but we saw an EBITDA margin that was stronger than we had originally expected. The EBITDA margin excluding UNE also saw a little bit of improvement on Q2, up 30 basis points to 33.4%. And our cash flow was also a little bit stronger in the quarter than we might have expected on some working capital inflows. So on slide 10, if I start by looking at the revenue drivers in the quarter. And as has been the case for several quarters now, the driver has been Colombia, which posted year-on-year revenue growth of 27% in Q3. It wasn't alone though. We saw Bolivia up 12% in local currency, and our Africa business also posted a 13% local currency revenue growth. The UNE contribution of $186 million for the first 47 days, or the last 47 days in Q3, which puts it on a run rate in line with the guidance we gave at the Capital Markets Day. On the next slide, turning to the EBITDA evolution, you see here the group EBITDA margin was 32.8%, and that was diluted 60 basis points by the inclusion of UNE. As I said, on a comparative basis, the margin was 33.4%, a little bit higher than Q2, as we saw a slightly better EBITDA margin in Colombia, which increased the South America EBITDA margin by 2.4 percentage points. In addition, we also recorded lower central costs than in Q2. I don't expect this to be the trend. We expect Q4 corporate costs to be nearer the level we saw in Q2 rather than those we've seen in Q3. There's also a slightly weaker performance from Africa. EBITDA was $55 million. It was in line with the same quarter last year, but 13% lower than Q2. And much of this was one-off in nature. We incurred a $4 million restructuring charge in respect to the network managed service outsourcing that we announced at the Capital Markets Day. And there were other one-off items totaling a further $4.2 million. Overall, we continue to invest margin in building our business, and compared to Q3 last year, we'd invested 2.4 percentage points in the gross margin. These are largely handset sales as we seek to get smartphones into the hands of our customers just as quickly as we can. We've also invested more in our commercial activities such as advertising. Slide 12 on UNE, and the maiden contribution is shown on this slide. It's clearly too early for us to see any synergy benefits, so this is pure trading. Revenues are after intergroup eliminations, but they do include $4 million of one-off revenue. Otherwise, this is all recurring revenue. Cost of sales largely are programming costs and excess charges, which gave us a gross margin of 68%. OPEX, including headcount, etc., was $74 million, which left us with EBITDA of $52 million and a margin of 27.8%. As I said, a welcome surprise to us. As I said, there was a bit of one-off revenue in that figure, so the underlying margin was closer to 25 to 26%. CapEx for the period was $25 million, leaving EBITDA minus CapEx at 14.5%. On the next slide, this is in line with the group's margin, which is shown on this slide. So our overall group margin was 13.2%. CapEx was in line with Q2, basically in line with our guidance for the year, and EBITDA minus CapEx was $60 million higher than Q2, although $40 million lower than the same period last year on a higher CapEx spend in this quarter. And the CapEx spend was largely on network infrastructure in mobile, as well as we spent about $50 million in LATAM on the fixed infrastructure in the quarter. Okay, quick look at cash flow. The working capital swing left the group's operating cash flow pretty strong at $305 million. The working capital movements were due to a rundown in inventory and trade receivables in LATAM in the main. Taxes paid were $79 million, which puts us on target for about $350 million for the full year. And our interest charge was $75 million, again relatively typical. Full year P&L tax interest charge should be around $400 million for this year. Dividend to minorities were relatively light this month, and we expect a similar level in Q4. So that left the equity-free cash flow, which is designed to show us the recurring cash flow available to meet the dividend payments, of $131 million, stronger than Q2 and the Q3 last year. This excludes large capital transactions, and we had a couple of these in the quarter. Obviously, the big one was the completion of UNE, which consumed $880 million of cash. In addition, we also acquired a company in Tanzania with some 4G spectrum, and we completed the funding on the final part of the LIH option to bring our stake to 35%. Incidentally, we have now restructured our arrangements with Rocket, so we have no further obligations to LIH, but we will continue to review investment opportunities on a case-by-case basis, and if we decide to invest, those will be based on the merits of each proposal. So, slide 15, as a result of the investment, we had sort of net acquisitions of $824 million, plus we consolidated just under $400 million of UNE debt. So our consolidated net debt is now $4.2 billion, and that represents a 1.9 times net debt to EBITDA. So finally, on slide 16, and in summary, in this quarter, We have continued to see the continuation of revenue growth that we've seen all year, but there's been a less of a currency impact in this quarter. UNE has made a strong start. We have seen some stabilization in our EBITDA margin, but it's too early for us to call victory on that, but it's a good start all the same. And cash flow was stronger in the quarter. Again, a little too early to call victory, but there's a strongly motivated team here who are focusing on driving profitable growth in this business. So thank you, and with that we'll take some questions.
Thank you. If you'd like to ask a question at this time, please press the star or asterisk key followed by the digit 1 on your telephone. Please ensure that the mute function on your telephone is switched off to allow your signal to reach our equipment. If you find that your question has already been answered, you may remove yourself from the queue by pressing star 2. Again, please press star 1 to ask a question. We will pause for just a moment to allow everyone to signal. Our first question today comes from Sergey Dulgetsky of Gabelli & Company.
Good morning, and thank you for taking my questions. So the first question is for Hans Holger, just a broader question. Obviously, UNE is an important acquisition that you made, and in the short term you're going to be focused on integration and execution. But could you share your thoughts on M&A, maybe in the medium term? As you look at your portfolio, what functional or geographic gaps do you see? Is it going to be focused on combinations of mobile and cable? Just any general thoughts on M&A going forward?
Yeah, as you mentioned, the main focus right now is on UNE because it is a very transformational deal and the biggest deal actually in the history we've made, and that takes all the attention. So we don't see short-term any kind of major M&A activities. If there are in-market consolidation opportunities, we may obviously look if it comes to mobile or cable, but we do it very opportunistic and with the kind of financial discipline we want to keep at this stage. Simply because we feel that basically the current structure we have and the current assets and tools we have in each of the markets is sufficient to deliver the strategy. So don't expect any bigger M&A. There may be smaller things, but on a smaller scale, and nothing is a must for us in order to deliver the targets.
Right. Okay. And one question on Paraguay. Revenues were down 7%, but subscriber momentum has improved. Could you comment a little bit on what you're doing in Paraguay to improve momentum and revenue trends in the market?
Yeah, we had some issues in Paraguay during the last quarter and the quarters before, which is mainly driven to customer perception, brand tracking, and some behaviors we had in the past. And one of the major issues has been the quality of the network, which we had to fix, which we are doing currently, and some clarity on the offers, I think, when it comes to bundling products, and down to very simple things like customer service and quality of handsets and those kind of things. So we have changed a lot of smaller tools, nothing fundamentally, and start to work. And we see for the momentum when it comes to the business, we see that the Net Promoter Score is going up again. We see that the brand tracking is improving as well. So we should see a positive impact, and we should be through the worst when it comes to Paraguay.
Okay, great. Thank you.
Thanks.
Our next question comes from Thomas Heath of Handelsbanken.
Thank you, Thomas Heath. There are a few questions, if I may. Firstly, you report some non-recurring items for Africa for the change in outsourcing of the network. Should we expect more of this coming ahead? So one-offs excluding UNE, any thoughts that would be helpful? Secondly, license costs. An update would be great for what we could expect next year. And then thirdly, any comments on Colombia, the trading climate after the regulatory change on handsets. Thank you.
Let me quickly deal with the first question on non-recurring. I mean, in Q4 we expect about a $5 million restructuring charge in respect of the managed service outsource. But other than that, we shouldn't see any into 2015.
And when it comes to license, I mean, the only big license renewal we have for next year is Bolivia, which we start to have a dialogue with the government. It's too early to say any kind of concrete numbers, but we don't expect any kind of drastic changes to the situation we have currently. When it comes to spectrum, which is the other part, of course, it's normal course of business, so no change towards next year anticipated as well. So I would see a stable situation on that one. When it comes to the trading climate in Colombia after the new regulation that we can't subsidize handset, so far it didn't have a big impact on our position in sales, as you can see in the Q3 figures. There will be a kind of reallocation, we assume, a bit of cost into the sales chain and the marketing cost in that respect. But as I said, it hasn't slowed down, and it gives a positive impact on the EBITDA cycle going forward probably. So smaller, minor impact so far.
That's very helpful. Thanks.
Thank you.
Our next question today comes from Eric Perez of Danske Bank.
Thank you. Simple question. CapEx in Oona, could you tell us what you expect going forward there? And I note that the operational free cash flow was positive. Is that something we can generally expect to continue going forward? And also, I don't know if you're willing to share numbers on it, but if not, maybe you could tell us what does Oona need in general terms, in terms of CapEx? What types of projects do you expect to see there? Thank you.
We gave guidance at the Capital Markets Day for this year's CapEx, which we said would be around about 120 million. They spent 25 million in this quarter, or the stub period of this quarter, and I see no reason to change the guidance for the full year. We're not in a position to give guidance on 2015, but again at the Capital Markets Day we did state our ambition to have a significant sort of investment and increase in the number of homes passed. So I think you should expect us to be in investment mode in Oona and in Colombia.
And maybe to add to the second question, I think the key point when you look at the Oona, our first impression is that the company is very well managed and very well run and ahead of its own targets, which is positive. The kind of key leverage we have on the long term is you're going to work on the margin, because that's in the higher 20s to 27% normally, as we stipulate in Miami as well. Cable margin should be in the mid-30s at least, so that's one of the big upswing. And this can come through better sales, of course, better sales efficiency, but as well, for example, churn is higher than in other markets we are used to, so there's a big upside when it comes to the churn side as well. And combining those things, I think the CapEx profile will be pretty stable, and you see the kind of operational improvement in the coming 12 to 24 months.
All right, thanks.
Our next question comes from Bill Miller of JM Hartwell.
Good evening. Can you help us by giving us any further definition of the timeline in Colombia? When are you going to be able to tell us more? You had the timeline in the presentation in Miami, but there must be some interim dates that would be significant to you, and you might be able to help us with if it is going to be the transformational event. Secondly, if you look at 2017 and looked at the sources of revenue and EBITDA, could you just break that down generally for us, because it's going to be so much less of a telephone company and so much more of a media, etc. company. And maybe if you could break that down for us, it would give us not only benchmarks to measure you, but also to help us understand why this is going to be a growth company.
Thanks, Bill. I'll take the first question, then Tim can jump in on the second part, and then we can follow up probably later on as well. I think when it comes to the timeline, we just had the keys to the company a few weeks, so we really getting all the kind of facts and numbers together. As you remember, we were not allowed to access any data because it was a merger process, so we had to restrain from that, and hence we need a bit of time to get the facts on the table, and then based on that we can give clearer guidance, which will be probably in the course of the beginning of next year. So that's the best we can do, and to do it thoroughly. However, as I just mentioned before, if you look at the kind of fundamentals of the business and the kind of early indications, The growth will come from ARPU increase and new sales, lower churn, which is a kind of a big factor, and efficiency in the business to boost the margin up. And that should be a clear case for us going forward. The good news is, which is more important really at this stage as well, is that we get a very good asset handed over on top, so it's performing well. So the starting point is easier. If Tim wants to give a bit of light on the EBITDA breakup in 2017.
Well, in terms of, I mean, again, at the Capital Market Day, we showed you our expectation of revenue by 2017, and we'd expect mobile at that stage to be around about 60% of our overall revenues. We would expect cable to be about 30%, and MFS/other digital services about 10% at that particular stage. So that's the sort of trajectory we're heading to. Obviously, we're actually well on track for that, with post-UNE cable being about 25% of our revenues to date. And we've also seen, as you saw again in this quarter, the data accelerating again, probably ahead of our expectations, so that now, as Hans-Holger said, 1 in 4 of our customers are on data and using data services with us. And we see that sort of translating through to EBITDA. We sort of highlighted at the Capital Markets Day there will be a little bit of gross margin adjustment, but our target is to get back to the 35% EBITDA margin by 2017.
And the mobile, that's fine, but the mobile, how much will be data at that point? 50%, 70%? It's going to be a huge proportion, which will be data at that.
You're right, Bill. I mean, we estimate it'll be about 55% voice and SMS and 45% data by that stage. But our trajectory at the current level this quarter, for instance, is ahead of our overall expectations. So we're going to be sort of by 2017 round about 50-55% mobile, and then the balance will be coming from data, and that will move. That could move very, very quickly given the uptake of our data customers.
Great, thanks very much.
Thanks, Bill.
Our next question comes from JP Davids of Barclays.
Hi, good afternoon. I have 2 questions, please. The first question is just on market share, which you present in the appendices of your presentations. That's been broadly flat over the last few quarters. Given the amount of your margin you're reinvesting in these businesses, is that something that worries you, or do you think that doesn't quite give the full picture in terms of the quality of customer you're attracting here? The second question is just on a couple of your assets in Africa, being the DRC and Tanzania. Very notable upticks in the net adds for those 2 operations. Is that directly related to your moving out of the cities into the rural areas, or is there some other factor driving that? Thank you.
Yeah, on the first one, I mean, you gave the answer by yourself. It is nothing which concerns us, because we move from the total number of market share and customers more to focus on the high value customer, which are the kind of key driver for us going forward. Hence, if you go into the kind of customer segmentation more in detail on the market share and see what kind of customers you get, the picture is better, and that's the reason we are not concerned in that one. Plus the fact that sometimes the definition of market shares, particularly in Africa, is different country by country, and it's hard to track it. So we rather follow or see the kind of return of the investment we have done on the revenue growth, and subsequently, of course, on the return on the investment. So that's to the first question. The second question is, yes, we see good subscriber intake in Africa, and it is a direct correlation, obviously, of the investments we did outside the capitals into the rural area. It is the investment in some of the markets we did when it comes to 3G. And data we have been pushing more aggressively, and it's a combination of, or it's a factor of the kind of interoperability and the kind of efforts we made on the mobile financial service side, which helps, of course, to drive customer increase and customer basis. Plus, which is important for Africa to notice, it is a very young and still growing population, so the kind of addressable base is much lower. The key point for us will be in Africa really to keep this momentum on the growth, but as well to focus on churn, because it's a very high churn market. So we see an upside for us going forward on churn in Africa. Hence, we announced today the launch of Tigo Music, for example, which we know from Latin America is a very nice churn preventive tool.
Thank you.
Thank you.
Our next question today comes from Gonzalo Fernandez of Royal Bank of Canada.
Hi, could we maybe get an update on the upcoming spectrum options? I believe there's one in Honduras might be scheduled for the end of the year. And then maybe also on the regulatory reviews you're having in Paraguay and maybe other assets. Just maybe more broadly, what are the short-term risks you guys see to the business?
So spectrum auction, I mean, there is something coming up indeed in Honduras, but we just made a big auction nearly 12 months ago. We feel pretty well served right now, so there is no need for us to look more aggressively. Otherwise, there is nothing on the horizon, which, at least from my point of view, in terms of larger spectrum auctions in our markets. So nothing which is unusual in that respect. Honduras is the only one I'm aware as well, but as I said, we are not under pressure there. We feel fine what we have. Did you ask for the review of the assets in Paraguay specifically or in general?
Well, in Paraguay maybe in more detail, and if there's anything similar coming up, just so that we are aware of.
No, I think in Paraguay, I mean, as I said, the main focus was, as we said earlier in the call, the turnaround from the execution side, which with the new management we are very pleased is going in the right direction. So that's the one block. The second block is in terms of the assets. We really focus on all the assets we have in terms of cable, mobile, and content. So this is exactly the kind of play we want to have, and there is no need for us to add more assets, or there is no discussion that we dispose any kind of assets in Paraguay. There is some discussion when it comes to the regulatory side in Paraguay in terms of interconnection charges, which may come, but it's nothing which we are much concerned of right now. We're in talk with the government, and it will be probably normal course of business like we have seen in the past, so nothing to worry. So Paraguay seems as a market very stable for us. It's just that we had some issues to fix internally, which we have done, and now we move forward.
Okay, thank you.
Thank you.
Our next question today comes from Luigi Minerva of HSBC.
Yes, good afternoon. Two questions, please. The first one is on Ghana, and I just wanted to understand if the price increases have been specific to Tigo or if it's a general market move, and whether that is sustainable medium term. And secondly, on Colombia and competitive dynamics, if you're seeing an impact on your business from the MVNOs, for example, Virgin Mobile, and whether bundling with UNE's service is a good answer to their approach. Thank you.
Yeah, on Ghana, it's a whole market which is increasing the prices. So it's more disciplined market approach and sensible market approach when it comes to pricing, which we are benefiting on as well. And particularly when it comes to data, of course, is very crucial. You may have seen that we actually have become the second largest operator when it comes to data in Ghana in the last week. So this is important for us, and it shows that the market is acting sensible in that respect. When it comes to Colombia, the MVNOs, so far really no major impact. Virgin or whatever is something we follow, but doesn't have affected our numbers or our intake. Long term, obviously, it's a threat you have it's a competition you have to look at. And exactly what you said as well, we believe we can go out of this price debate to the value for money debate by bundling with UNE and bundling data access mobile, data access fixed. And then on top, strong entertainment services and other services. So people feel, even if the price relatively may be lower on MVNOs in the future, they get more value from us by bundling.
Okay, thanks a lot.
Thanks.
The next question comes from Andreas Joelsson of SEB.
Yes, a couple of questions for Tim. Could you give some guidance on tax rate for the full year, first of all? And secondly, on net financial items, is this a run rate that we should expect going forward? Or is there sort of any positive items we could expect for other financial items, or is the 86 million in this quarter, is that entirely related to the put option? And thirdly, you gave an UNE guidance at the Capital Markets Day. Is that still valid on sales and EBITDA?
So in reverse order, the UNE guidance is still valid. We're certainly on the run rate on revenue. We did slightly better in the Q3, but I still will hold the guidance we gave for the full year of $120 million. There's been a little bit of currency devaluation there since we gave that, but so I'll leave that. In terms of the other non-operating income, the 86 million that's credit in our P&L this quarter, it is almost entirely to do with the put options revaluation. Those get marked to market every quarter. Plus there's some offsetting FX adjustments in there. But it's all non-cash and probably not one to dwell on too much. In terms of the tax, this is our tax did move around a little bit in the quarter. We had some adjustments to a deferred tax liability and the deferred tax asset. But in overall terms, I think I think I've given guidance in the past that we expect it'll be for the full year around about the 300-350 level, and I think that continues to hold. Giving effective tax rate is not that easy for us given the fluctuations of the put and call option I've just talked about. So we've given a bit more help on the absolute. Does that cover the questions?
Yes, the net financial items, the sort of operating net financial items, is that the run rate you had in Q3, is that what we should expect going forward as well?
You're talking about the interest, the net financial expenses with the interest. Yeah. I think that's a good proxy for, certainly on a P&L basis. I think we'd expect about 400 million for the full year now, which is sort of kind of year to date with 300, so that's about right. 100 a quarter.
Perfect. Thanks.
Okay. Thanks.
Our next question comes from Chris Grundberg of UBS.
Hi, thanks. I just had a couple of quick ones. Just a clarification on the rocket and the LAH developments. Can you say are you looking for a further telco partner in the region for that entity? And if so, can you give any update on discussions there? Then secondly, just specifically on the DRC, any extra colour on the expanded coverage and the push into the Kivu region? I see there's some commentary. Just any extra colour there would be helpful. And then lastly, I think you pointed out in the presentation that you are getting a decent uptake of pay TV customers paying with MFS. Can you be specific? Can you say how many customers now are using MFS as a payment mechanism and where that could get to? Thanks.
Yeah, if we start with the first one, the LAH, the idea of course is to run the company forward and the business forward as they have been, and they're doing very well in terms of their financial targets. We have to take it case by case really and opportunistic. If there's more cash needed, we don't need it at this time. But if there's more cash needed in the future, how do we do it? And if we bring in partners on the individual business, or if we bring it on the holding level. And in some cases, as Tim mentioned earlier, if there are good opportunities on the individual basis, we may even put in some money. I think so. The business is self-funding at this stage, and then the rest we see when it's coming. Just to highlight as well for us, the reason why we take a different approach is that we have enough opportunities to grow our core business at this stage, so we don't see the need or the reason to allocate capital in this one. The returns are closer to our core business in mobile and cable and the other things we are doing. If it comes to the push into the DRC regions and Kivu in particular, a large part of the subscriber intake in DRC is based on the expansion to the region. So the pickup is very strong and should continue there. And therefore the step was right. And we can see it as well when it comes to the volume of money transfer, for example, from the Kivu region to the capital. On MFS, it's a big push in that respect. So we can see that the kind of regionalization strategy is working when it comes to DRC. However, keep in mind it's a huge country, so there are much more regions we haven't covered. It's a step-by-step and slow approach to cover the whole country. If it comes to the pay TV side, I don't have the exact figure, but I know that a large number of the DTH customers are using, or a large number of the DTH customers who are Tigo customers are using MFS as a payment system, which was a surprise for us as well. But it shows kind of strengths that you have in terms of I bundling, of course, various products, but B, having MFS as a payment infrastructure. If you want to have the exact figure, I would have to come back to you after this call, but it's just an early indication how we combine the various assets we have in the company and use intercompany synergies.
That's helpful. Thank you.
Thank you.
We'll just take our next question now from Lena Olsenberg of Carnegie.
Yes, hello, thank you. I was just going to ask you a little bit on, first of all, on Africa, the margin. If you adjust for the restructuring charge, you are sort of back down at the 23% level, whereas you were up last quarter. So I'm just wondering, is it the marketing spend that varies between the quarters, and what should we sort of expect into the fourth quarter and next year? Also, if you could say something about if you have any opportunity to refinance Ona's debt, the existing debt that they have, and also if you could shed some light on the integration costs, how you expect that they will come over the next few years, how much next year and how much the following years. Then I had a question wondering a little bit about the MFS customers. How do you measure an active and inactive customer? What sort of churn measures are there, and what causes customers to leave?
If I start with the margins, because there was a lot of questions. With the margins in Africa, it is indeed, of course, marketing costs and sales costs you have and campaigns you're running, which are giving the swings, and then it depends a bit on the markets you are in and the kind of momentum. So, for example, Senegal, we have been a bit more aggressive during the quarter than we have been in other places, and those are the kind of variances you have. When it comes to next year, obviously we don't give any guidance into next year, but we should see that the investments we have done should result, of course, in returns as well in Africa. So the margins should improve in the coming quarters and towards next year as well. To what extent we're going to communicate closer to next year. But this is very important. Africa is really a kind of place of investments right now. It's grabbing market share, it's grabbing new customers, and it's grabbing the kind of transformation into new services like MFS and music now and those kind of things. So it is a place with strong growth, but obviously it comes with certain kind of investment as well. That's about the margins. When I take them, maybe the MFS customer, and then Tim can talk about Una integration cost and the other question. So MFS customer, we normally, if a customer doesn't have any transaction within the time frame of 3 months, I think, there may be some slight variances between the countries, then we tell it as a non-active customer and we take them out. The reason they're churning, and again, this is not very sophisticated because it's a lot of prepaid and we don't have all the data always on hand, is normally that people simply switch account or have no money to send or don't you see the kind of usage. Many customers, however, and this is blurring the picture a bit as well, many customers have even double SIMs, so they have 2 bank accounts, one with us, one with competition, or even 3 times, so they can send money easily around the kind of network. So churn is not the biggest focus right now. The biggest focus really is more the kind of volume and getting the customer base up in that field.
I mean, just on a technical basis, we use the same churn definition we use for mobile customers, namely 60-day active. So if they've performed a revenue-generating event in the last 60 days, they're still active on our numbers.
Okay.
In terms of Uni integration costs, we haven't changed them from the Capital Markets Day. We said $105 million. Phasing, roughly 50-50 into 2015, 2016. Again, we haven't sort of fully fleshed that out at this stage, but I think that's a decent rule of thumb. Which was a question we haven't answered. Of the Uni debt?
Yes, if there is an opportunity to refinance that also, maybe if you could say what rates they are at versus your rates, and if you think that you will refinance that debt, and if that would bring low interest costs.
We will be doing some fairly sizable refinancing of the UNE-Tigo business in Colombia. Part of the first stage of it will be to refinance an intercompany loan that Millicom has got down there. The UNE, I can't recall exactly what rate it is. I didn't recall it being massively out of the money. But we're really just looking at the capital structure down there. And there'll probably be some work we can do and give you a bit more visibility on it on Q4.
Okay. Thank you.
Our next question comes from Stephen Bichard of Citi.
Hi, I've got a couple of questions, if that's okay. The first one is on the UNE margins, which seem to have increased from around 23% to around 26% now. Maybe you could give us a bit of light as to how you've got there. Secondly, it's probably a bit early to talk about when a trough in Honduras might be coming, but maybe you could tell us what are the key causes of the negatives in Honduras and when you think you might return to growth there. Then also Paraguay regulation. I think most people are aware that the MTRs are under review for changes in 2015. Maybe you could give us a bit of light as to what you expect and whether you've given any investment commitments and the progress you've made on getting a satellite TV license there. And then the last question is just on the greater than 9 billion revenue guidance for 2017. Will that be in 2017 foreign exchange, please?
I think starting with the UNE margin, I don't think we've changed our view on it particularly. I mean, bear in mind we gave guidance at the Capital Markets Day after what have we had about 6 weeks of the business in our hands. I think it's performing well. We're pleasantly surprised by it. There was probably a couple of percentage points in there that was due to the perhaps a one-off revenue line, but no, I mean, I think it's it's performing quite nicely, and we're very happy with it. Thank you.
So maybe if I come, or just to highlight on, because I think the question was as well, was there any kind of special effect during this quarter? And the answer is no. The margin, it seems the underlying margin performance is strong in UNE at this stage. When it comes to Honduras and the competitive landscape, as far as we understand, there was a question. I don't think there is a kind of major change. I mean, there is a kind of battle we had in the past with Claro and the other players, but it's more about the market environment, the GDP situation, and the regulatory environment, which is a concern so far. They have been affecting us in the last 12 to 16 months. The operation actually is doing pretty good and can hold up the performance in terms of market share. And of course, we're rolling out cable there as well, so we should see the impact of the bundling offers going forward in Honduras. It is a tough environment, but the business is doing in a tough environment satisfactory. When it comes to the Paraguay and the regulatory changes, there is a discussion indeed, and as we mentioned earlier as well, and we expect an MTR cut to be announced in the coming weeks. The cut we forecast is around 40%, but we don't see, and this is the most important point for us, we don't see a regime of asymmetric MTR being implemented, so it should be manageable and normal course of business, so nothing which massively concerns us. And as we said as well earlier during the call, we are in a dialogue with the government there as well. When it comes to the 9 billion revenue target by 2017, obviously, we are not the experts when it comes to currency forecasting and how currency will move. But I mean, the kind of normal kind of currency movements are factored in. If there are extraordinary movements on a larger scale in several countries, like we have seen, for example, recently in Ghana, then of course we would have an issue. But until then, I think we don't see the risk that the hit or the target will be missed because of normal currency movements.
We will now take our last question for today from Rodrigo Villanueva from Merrill Lynch.
Hi, good afternoon. 2 questions, please. My first question is related to corporate costs, which declined by 14% quarter on quarter to $57 million. Is this the new run rate we should forecast going forward? And secondly, Tim talked about a one-off at UNE. Could you please share with us the amount? Thank you.
If I take the first one, unless Tim wants to stop me, I think the corporate cost, I would be careful to look quarter by quarter or quarter on quarter. I would rather look on a kind of rolling basis where you can see that the kind of cost increase we had are stable. It is something which will stabilize going forward as well. And just to get this point one more time out, which is important for us, in the corporate cost, we have a lot of the development costs and new business we have been launching in the last couple of 24 months embedded as well. So it's not that it's just non-value destructive or non-value creating costs. It's value creating costs as well in those elements. So depending on how much new business activities we do, which we say is going to slow down a bit because we have all the kind of things in place, the cost will stabilize there as well. But don't see it quarter on quarter. Don't take this quarter as a run rate going forward. The one-offs in UNE, I hand over to Tim.
Yeah, it was only a small revenue one-off. I mean, again, it's not. It wasn't that significant. $4 million out of $186 million.
Understood. Thank you very much.
Thank you.
Thanks.
Due to time constraints, I would now like to hand the call back to the speakers for any additional or closing remarks.
So thank you everyone for listening in this conference call and all the questions which have been asked. As usual, if there are more questions, don't hesitate to follow up with me, Tim, or Nicolas over the next coming days. And otherwise, we all hope to see you again for our conference call on the fourth quarter results, which will be in 2015. Until then, all the best and stay tuned.
That will conclude today's conference call. Thank you for your participation, ladies and gentlemen. You may now disconnect.